take monthly returns and do 5-year rolling averages, we have outperformed both the S&P and the NASDAQ 100% of the time.
ARK Invest's founder and CEOs, Cathie Wood, still firmly believes in the potential of her picks for the ETF managed by the investment management firm. In a recent interview, the chief investment officer explains that her innovation stocks are way undervalued. She also explains that her disruptive technology picks will form a new world order when other more traditional stocks fail. In fact, Wood sees some of her picks, which are currently valued at $10 trillion, rising to $210 trillion within the next 8 years. In the meantime, the CEO adds that everything going on with her stocks right now is only temporary. Welcome to Savvy Finance. This video examines Cathie Wood's projection of exponential growth for her disruptive technology picks over the next 8 years. The renowned investor declares that the recent loss is just temporary and things will soon take a turn for the better. Before we get into the video, please ensure you drop a like for the video and share it with others. Enjoy! Cathie Wood is an American investor and founder, CEO, and CIO of ARK Invest, an investment management firm that manages several actively managed exchange-traded funds. In February 2021, ARK Invest had $50 billion in assets under management thanks to Cathie's pick of several innovative stocks that became very popular during the pandemic. From the peak of the pandemic to February 2021, the firm witnessed a whopping 350% increase in prices. It has since dropped drastically, with prices falling by 57% between February 12, 2021 and January 27, 2022. Many of Wood's trusted stocks are also not faring better. Currently, 100% of the stocks in the ETF are in a bear market and 87% are down by 40% from their highs. Despite the not-so-encouraging figures, Cathie Wood believes the stocks still have a lot more to offer investors. She explains that people are only focusing on the negatives without considering that the company is still making a lot of headway compared to the major stock market indexes. For example, on a 5-year rolling returns basis, ARK Invest outperforms both the S&P 500 and NASDAQ by 100%.
It really is astounding, Cathie, when we sit here and have this conversation today. 100% of the stocks in the innovation ETF are in a bear market. 87% are down more than 40% from the highs. Those are incredible pullbacks. We have you for an extended period of time today, and you can speak directly to a lot of investors in this interview. What do you tell them? How do you convince them to stay with you?
Well, first of all, I'd much prefer to be with you and holding our clients' hands and explaining what we think is going on at this point in time rather than at the highs. And I think our biggest concern is that our investors turn what we believe are temporary losses into permanent losses. Now, what's interesting from a flow point of view, just before we get to the answer to your question, last year we did inflow. A lot of that was front-end loaded. It was $17 billion. And in the last 30 days, we are inflowing again, net inflowing a little less than $500 million. So what we believe is happening is because we give our research away, because we are so transparent about what we're doing, and because our research is so good, I think it is the best in the financial world when it comes to disruptive innovation. I believe that there are individuals who are reading our research and saying, hey, this makes a lot of sense. I didn't know this. I did not know that there are 5 platforms involving 14 different technologies that, if we're right, are going to move from being valued in the equity markets, public equity markets, at $10 trillion to roughly $210 trillion within the next 8 years. That's a 46% compound annual rate of return. There is one market that is getting this right. It's the private market. Last year, and you're right, we have had a significant decline. If you look at our peak, which was February 12th of last year, so roughly a year ago, and you look to the trough, which we believe was January 27th, that was a 57% drop. But if you looked at our appreciation from the depths of the coronavirus to February 12th, that was a 358% increase. And so we're seeing a lot of analysis of our performance out there, which is cherry picking, dates And I've just given to you what has happened. And there's endpoint sensitivity to these dates. If you look at our returns on a 5-year rolling basis, and what I mean by that is take monthly returns and do 5-year rolling averages, we have outperformed both the S&P and the NASDAQ 100% of the time. If you take the same on a 2-year basis, I have those numbers here, we have outperformed the S&P 500 90% of the time and NASDAQ 81% of the time. We've just been through a significant downturn, a correction relative to the peak. And we do believe that innovation is in bargain basement territory.
Cathie Wood also explains that her picks of disruptive technology stocks such as artificial energy, DNA sequencing, gene editing, robotics, energy storage, 3D printing, and blockchain technology are not as oversubscribed as other stocks in the indexes. Wood believes that the traditional investment scene is littered with too many investors putting too much capital with only a few opportunities. She likens the situation to the dot-com bubble and predicts that the market will soon implode under the pressure.
And there's just one other thing I'd like to add here. I went through the tech and telecom bubble and know very well what that feels like. And what we learned was that there was way too much capital chasing too few opportunities too soon. And the internet was, had been brought to life, and the dreams that investors had and the valuations based on potential eyeballs maybe 10 years out caused investors to fall all over themselves to try and raise their technology positions to north of their benchmark. And the benchmark had gone to 35%. That was a mistake. Too soon. The technologies were not ready. The costs of those technologies were prohibitively high. Cisco, Oracle, the traditional players back then were not going to bring us into the cloud and artificial intelligence age. They're completely different companies. And even today, I look at the S&P 500's 28% in technology. We do not own one of those technology stocks. Those are either mature technology stocks. In the case of Microsoft, they've done a wonderful job migrating towards the new world. But our technology stocks are way undervalued relative to their potential, whereas we do not believe Microsoft is. And I'll just add one last thing. Today, we have investors doing the opposite of what they did during the late 90s. They are running for the hills. It's risk off because of inflation, interest rates, and the hills are their benchmarks. So they're running to the past. And if we're right, and the disruptive innovation that is evolving is going to disrupt the traditional world order, those benchmarks are where the risk is, not our portfolios.
There is no doubt that Cathie Wood's disruptive tech picks are smart choices. DNA sequencing, for example, is greatly accelerating biological and medical research and recovery. Blockchain technology is also redefining many sectors, including investment, finance, data storage, and gaming. With time, they will all become bigger and more profitable. In the meantime, however, investors have to deal with the volatility. Thanks for watching the video. Remember to like the video and subscribe to the channel.